Good afternoon. This is Tom Alexander. This is the weekend update, U.S. stock market update that I do every weekend. Today is Saturday, August 16th. This is the report for the week beginning Monday, August 18th. I do this every single week. You can find this report on my website as well as previous reports. If you go to alexandertrading.com, click on weekly update, weekend update. I forget what it's labeled, but it's free. You can go back and you can review all the charts that I'm going to show you. You can download a PDF. You can also access the PDF and the videos from previous weeks. Also, I would very much appreciate it if you would subscribe, like, make comments. Please share this with all your friends. If you think it sucks, share it with your enemies. Just share it. Thank you. Okay, let's talk about the market. We have quite disparate activity among and between the indices. We had the Dow, for instance, spike to a new all-time high on Friday and then reverse. We have lagging indices like the New York Composite, the Russell, the RSP. Stuff is all over the place. Wide range up days, reversal days the next day. What's going on? Let's take a look. And I think this is very important for perspective to start with this. Okay, this is the SPX. The upper panel is the SPX. The lower panel is the NYSE cumulative advanced decline line. And you can see the AD line, the cumulative advanced decline line, is following the market into new all-time highs, the broader market, the SPX. Okay. Now, I can't find, I have been trading 40 years and I've gone back and I cannot find a single bull market top that coincided with an all-time high in the NYSE cumulative advanced decline line. If one is out there, let me know. I don't think there is. Now, unless it's different this time, what this implies is that there are months, likely months, many months possibly, to go before we have a bear market. Now, that does not preclude 3, 4, 5, 6, 7, 8% retracements, but it strongly hints that any decline prior to higher highs in one or more of the indices and a significant divergence between that higher high in whatever index that is or indices that makes a new all-time high with a lower high in the AD line, it makes it very unlikely that any drop is the final Armageddon top of all time as being forecast by so many out there, which is it's just, to me, I've been trading so long and I've seen this movie so many times. Every single time there's a new all-time high, people come out of the woodwork calling for the grand super cycle wave 5 top. And maybe I'll live long enough to see that. I don't know, but it's beginning. If it occurs, it's beginning to look less and less like it's going to be in my lifetime. So anyway, the bottom line is that there's no intermediate term evidence. And I've seen all the valuation stuff on X and social media and the P ratios and all this. I get that. But when I come back to simple things like what we're seeing here, again, if this is a top of significance, meaning it's a bear market top that lasts, 9, 10 plus months or a couple of years, then it's the first time it's happened that I'm aware of. So now, again, it does not preclude more downside volatility than we've seen. And I frankly think that we could be on the cusp of that. But again, that's a tricky proposition, and you need to be careful of the time frames you're trading. But from an intermediate term basis, it's hard to be overly bearish here, except for being alert and mindful of the fact that we're overdue for some sort of downside volatility, okay, that lasts more than 45 minutes, which is about all we've had since the low in April. Okay, so Here's the advanced decline line. Now let's go through and take a look at some things that may be immediately relevant for trading next week. And I'm going to come back to this chart. This is a really good chart, but I'm going to come back to it. Bear with me a second here. Let's see. I have lost my way. Not unusual. Bear with me. And we'll figure this out. Okay, so here's the SPX. I'm going to go to the cash indices. All right, I landed on the Dow, so we'll just talk about the Dow for a minute. I go through each of the indices. All of these charts are posted on the website again. They're posted in a PDF if you want to download it with these levels. But it's interesting that the Dow spiked above its all-time high, then reversed sharply on Friday. If we look at the SPX, we're in a 3-day balance area, and that was the profile I showed before. I'll come back to that when we wrap this up. It's a very important chart. Where's the NDX? Let's do this. Here's the NDX. Now, the NDX is showing a little relative weakness. That's something we have not seen since the low in April against the SPX. It's still closed a new all-time high ground for the week. And then did the Dow, the SPX, the NDX, the equal weight is diverging from last week's new highs, the SPX and NDX, the New York Composite, which is the broadest of the indices. It's it's not confirming the higher highs, weekly highs in the SPX and NDX, but it looks okay at the moment. And then, of course, the Russell, which is just an interesting index. Now, this is weekly. Let me go to a daily. The Russell was wild last week. So you had this incredibly frenetic panic buying that began on, what is this, Tuesday, and carried up into Wednesday. And then you basically crashed into Thursday. And now we're in a 2-day bounce Thursday and Friday. This is a very critical level in the Russell. Now, I'm going to briefly touch on the internals. I didn't even put these in the reports this week because it's just, following NYSE data right now has not been helpful because of the dynamic of the index and the composition of the indices and the movement with everything being driven by 8 or 10 stocks. This has not been helpful. And that's not unusual in a bull trend. In a bull trend, and I've said this 7 million times. Some of you I know get tired of hearing it. If you're around for the first time, I'm going to say it for your benefit. This can be extremely helpful in helping to identify lows in all time frames. It is almost counterproductive and useless in identifying tops. Now, something else that I watch internally, VIX has sort of fluctuated up and down in this move up. It spiked a little bit on Friday. That's too granular to take away anything of importance in my mind. So let's go back over here to a couple of things that I want to leave you with that I think are tradable and important. All right, this is the profile view of the SPX. Now, what I've done here, this is the auction from Wednesday, Thursday, Friday. If I split this out, if I unmerge the distribution, you can see this is Wednesday, this is Thursday, this is Friday. It's clear this is one auction. And so if we combine the profile units of each day into the auction that it is, a more meta auction, to borrow a phrase from Don Jones, you can see, and we closed on Friday right here. So we're below the high volume node. Now, the general guideline when you have a mature auction structure, is you want to be favoring shorts below the high volume node, longs above it. And again, I posted this in the report for your review. Now, a even simpler view of things is taking a look at the SPX breadth chart. Now, again, I'm not even going to try and get into the if and or buts of right now between the relationship between breadth and the SPX. Let's just ignore this for a minute. So I'm going to reduce it down here. Right now, it's not helpful. What is helpful is noticing the migration of value as defined. And there are different ways you can determine the migration of value. One is the migration of high volume nodes in the profile units. This is a bar chart. It's making higher highs and higher lows. I don't think it could be clearer than it is. And until that changes, the trend is up. Now, if the SPX takes out and closes on a half-hour basis below this level on Monday, then the trend has flipped. At least that's a very early signal that the trend is flipped. Now let's look at the index. The trend in the index has already flipped. And again, these charts are on the website. They're in the PDF that you can download from the website, elegantrading.com. Click on weekly updates. It's free, et cetera. Okay. So we're in the early stages of lower lows and lower highs. The moving averages are about to cross. And you can see we've stair-stepped higher in the latest ramp off the April low. This began August 1st. Now, just for fun, since we're here, let's go back. This is June, and then you had this little perturbation in the force here in June, and then what did we do? Well, we started making higher highs and higher lows, right? You had some false breaks here, but if you go back and you make this a line chart, you didn't have a close below a previous swing. That's why I said on the SPX chart, you want a half-hour close below that level, because these levels, the algos are programmed. They know these levels. That's where you have all sorts of stops and strategies piled into these levels, and they tend to get run and gamed, etc. Those of you that are in the live room, by the way, we see this every single day in terms of what are the important levels for the day. Well, beyond a gross general idea about what the levels are, like we're going through here, if you think you can fine tune the important levels for Monday using a fib retracement or some sort of floor pivot gimmick magic, you're delusional. The levels begin to be established after that first half hour of trade intraday. That bottom line, hard stop. Okay, so where's the April? See, higher highs and higher lows. I mean, guys, trading is not easy. It's not, but it can be so much simpler than 99.99% of the people out there make it, and especially the gurus in the trading education space. If you're a trading guru, you depend on keeping things complicated to justify your existence. Okay, so this was the April low and the latest and maybe last generational wealth building buy opportunity, based on the 40% ramp up in the NDX. So we'll see. We'll see. But I do think that we're overdue for some sort of more of a two-sided day-to-day market that includes retracements that last more than 45 minutes. Okay. Again, thank you. You guys subscribe, share this with your friends and enemies. I'll speak with you again soon. Enjoy the rest of your weekend.